Wall Street spent the week holding steady near record highs, while Indian equities slipped and gold spiked past $4,400 an ounce as investors priced in Federal Reserve uncertainty and growing tensions in the Middle East. This dashboard shows the resulting weekly split. The S&P 500 and Nasdaq closed with slight gains, while the Sensex and the Nifty 50 finished the week down 0.6% and 0.8% respectively. This gap highlights a stark contrast between a resilient U.S. market and an Indian market beginning to give up ground. The initial pressure on the Indian market started at the Strait of Hormuz, where renewed friction between Iran and the U.S. disrupted the commodities market. That friction pushed Brent crude toward $90 a barrel during intraday trading, eventually settling the week at $87.53. Spiking crude prices triggered heavy foreign capital flight, resulting in foreign portfolio investment outflows of 2,336 crore rupees. This finally hit domestic equities, dragging the Sensex down 490 points, dropping 0.6%. Geopolitical friction is no longer a distant threat. It is currently operating as a direct cause of immediate foreign capital flight from the Indian market. While oil markets reacted to geography, central banks focused on inflation. On July 29th, the U.S. Federal Reserve held its benchmark rate at 3.5% to 3.75%, but three officials explicitly dissented in favor of a hike, the most divided vote since Kevin Warsh took over as chair. In India, the Reserve Bank made a similar move on August 5th, holding the repo rate steady at 5.25% and maintaining a neutral policy stance. For consumers, these twin rate holds translate into a flat verdict. Whether you are in the US or India, your home loan EMIs remain exactly the same this month. Within the Nifty 50, Dr. Reddy's Laboratories and Bharat Electronics bypassed the broader market slide, closing up 2.4%. Conversely, Tata Consultancy Services recorded the steepest drop among blue-chip IT names, falling 3.7%. Across the tech sector, Google released Gemini 3.7 Flash. They immediately halved their API pricing, while simultaneously boosting the model's Frontier Code benchmark score from 34.4% to 43.6%. While consumer borrowing costs remain frozen by cautious central banks, the underlying corporate landscape is shifting rapidly due to the commoditization of high-performance AI models. On the final commodity board, Brent crude gained 1.7%, gold climbed 3.1%, Bitcoin dropped 1.3% to settle near $63,000, and the rupee weakened against the dollar to close at 95.45. On the immediate radar, the FOMC minutes will be released on August 19th, giving markets a detailed look at the true depth of the Federal Reserve's internal division. This sets the stage for the Jackson Hole Symposium at month's end, where Chair Kevin Warsh will deliver his first major policy address. While U.S. markets remain near all-time highs, the 3% jump in gold shows investors balancing a divided Federal Reserve against heightened Middle East risks. For more market breakdowns and weekly insights, subscribe on YouTube and follow on Instagram at CA Tharun Dilip.